Hello and welcome to my stock review video. Today we will be reviewing Novo Nordisk, stock ticker NVO. If this video does well, I'll continue to do stock reviews either once or twice a week. If you have a stock you would like a second set of eyes on, please drop it in the comments. As always, this is not financial advice, simply my viewpoint of a stock based off of facts from different websites. You should not copy or invest in stocks without doing your own research first. As always, your capital is at risk if you choose to invest in the stock market. Novo Nordisk is a global healthcare powerhouse, but 2026 has brought a major shift in its narrative. Once the undisputed king of the weight loss gold rush, the company is now navigating a complex landscape of intense competition and evolving healthcare policies. The powerhouse portfolio, diabetes and obesity dominance. Novo Nordisk is famous for its semaglutide-based blockbusters, Ozempic, type 2 diabetes, and Wegovy, obesity. The 2026 game changer. In January 2026, the company launched the Wegovy pill, the first ever oral GLP-1 for weight management. This move aims to pivot patients away from weekly injections and toward a more convenient daily tablet. Innovation pipeline. Keep an eye on CagriSema, a next-general combination therapy currently in late-stage trials, which has shown even more significant weight loss results than semaglutide alone. With this very strong portfolio, are you thinking of adding Novo to your holdings in 2026? Is the gold rush over for the world's most famous weight loss stock? For the first time in years, the metabolic duo, Eli Lilly and Novo Nordisk, are no longer trading in lockstep. While Lilly is hitting trillion-dollar highs, Novo Nordisk has just plummeted 37% in the last 12 months. Today, we're breaking down the numbers. A $216 billion market cap, a massive EPS of $23.06, and a share price sitting at $49.57. But here's the million-dollar question. Is this 37% drop a falling knife you should avoid, or is the 20% upside predicted by Wall Street a gift to patient investors? First, let's look at why the stock is bleeding. It's a perfect storm of three factors. The new Trump RX policy and most favored nation agreements have forced Novo to slash Wegovy prices from over $1,000 to nearly $350 a month. That's a 60% cut on the top product. In its February earnings call, management shocked everyone by forecasting a 5% to 13% decline in sales for the year ahead. But don't count the Danish giant out just yet. Novo is playing the long game. In January 2026, they launched the first ever oral weight loss pill. The uptake has been massive, surpassing 50,000 prescriptions in the first few weeks. If Novo can move the world from weekly injections to a daily tablet, they own the convenience market. Yes, the price per unit is down, but the market is expanding. By making the drug affordable, they are targeting hundreds of millions of patients who couldn't afford it in 2025. But their secret weapon is yet to come. Keep an eye on CagriSema. Early data suggests it could be even more effective than current shots, potentially reclaiming the efficacy crown from Lilly later this year. So, where does that leave us, you ask? 12 top analysts have a consensus price target of $60.73. That is a 20% potential upside from where we are today. At a share price of under $50, Novo is trading at its most attractive valuation in 5 years. The market is currently pricing in a gap year for Novo. If you believe their new oral pill and next-general pipeline can offset the price cuts, this 37% discount might be the entry point of the decade. Now let's talk figures. Time to peel back the curtain and look at the actual plumbing of Novo Nordisk's finances. Starting with the short term, we're seeing a bit of a mismatch. The company holds 172.45 billion Danish krone in short-term assets, but their short-term liabilities sit higher at 215.66 billion. In plain English, their immediate bills outweigh their immediate cash-like assets. This is a tight spot that requires careful cash flow management as they scale up production for their new oral tablets. However, the long-term picture is much more stable. Novo is sitting on a massive 370.45 billion krone in long-term assets, dwarfing their long-term liabilities of 133.19 billion. This tells us that while the right now is expensive, the forever foundation of the company remains incredibly solid. But here is the statistic that every investor needs to watch: the debt-to-equity ratio. 5 years ago, Novo Nordisk was virtually debt-free with a conservative 10% ratio. Fast forward to today, and that has ballooned to 63.07%, with total debt now sitting at 122.39 billion krone. Why the borrowing spree? Novo has been aggressively spending on manufacturing plants and massive acquisitions, like the multi-billion-dollar Catalent deal, to fix their supply chain issues. They are betting the house on being able to outproduce Eli Lilly. The safety net: they are still holding 26.96 billion krone in cash. It's a comfortable cushion, but with debt rising six-fold in just 5 years, the pressure is on for those Wegovy sales to stay strong and service those interest payments. Competition. If Novo Nordisk is the pioneer, Eli Lilly is the predator. In 2026, the rivalry between these two has reached a fever pitch. Lilly's dual-action drugs, Mounjaro and Zepbound, have officially surpassed Wegovy in weekly new prescriptions. Why? Because Lilly played the manufacturing game better, doubling down on production while Novo struggled with supply. Plus, Lilly's upcoming oral pill, orforglipron, is expected by mid-year and, unlike Novo's, it doesn't require an empty stomach, which could be a massive lifestyle win for patients. The new challengers, Roche and Amgen. But look over your shoulder, because the duopoly is becoming a triopoly. Roche just dropped bombshell phase 2 data for its candidate, Court 388, showing a staggering 22.5% weight loss. Meanwhile, Amgen is moving into phase 3 with maritide, a drug that might only need to be taken once a month. If Amgen can prove that monthly dosing works, the weekly injection model Novo built could become obsolete overnight. Then the generic cliff. Then there's the international front. In 2026, the patent protection for the active ingredient in Ozempic, semaglutide, has officially lapsed in markets like Canada, China, and India. Global generic giants like Sandoz and Teva are flooding these markets with cut-price versions. We're talking about the same medicine for as little as $25 to $50 a month. To fight back, Novo has resorted to an unusual strategy, launching its own authorized, rebranded generics, like Plosbrio, just to keep a footprint in those budget-conscious markets. The wild card competition. And finally, we have the digital disruptors. Companies like Hims and Hers and various compounding pharmacies are using a legal loophole to sell custom semaglutide blends. While Novo is fighting them in the courts, these platforms have already captured hundreds of thousands of self-pay patients who are tired of high prices and pharmacy shortages. The dividend engine. But what about the income? While the stock price has been on a roller coaster, Novo Nordisk's dividend story is one of consistency and growth. In 2025, the company paid out a total of $1.8594 per share, distributed on a semi-annual basis. For investors, that represents a solid 3.8% yield, significantly higher than the sector average. Sustainability and the next payday. The best part? It's highly sustainable. Novo maintains a payout ratio of 51%, meaning they are returning half of their earnings to shareholders while keeping the other half to fund those massive new factories we talked about earlier. If you're looking to grab the next check, mark your calendars. The ex-dividend date is March 30, 2026. You must own the shares before this date to qualify. The payment will hit accounts shortly after on April 8, with a declared payment of $1.2752 per share. The UK tax advantage. And for our UK-based viewers, there is a silver lining. While Danish dividends usually face a high withholding tax, the UK-Denmark tax treaty reduces that rate to just 15%. This makes Novo Nordisk a surprisingly tax-efficient way to get exposure to the global healthcare boom right from your UK brokerage account. Most people think Novo Nordisk is just another big pharma stock, but it's actually structured more like a non-profit fortress. The Novo Nordisk Foundation controls over 77% of the voting power. Why does this matter to you as an investor? Well, in 2026, when the stock dropped 37%, a normal company would be under siege by activist investors demanding immediate layoffs and cost-cutting. But not Novo. Because they are foundation-owned, they can ignore the short-term panic of the stock market. They can keep spending billions on new factories and next-general drugs like CagriSema because their boss, isn't a hedge fund manager in New York. It's a scientific foundation in Denmark. This structure is a safety net during a crash, but it's also a reminder, when you buy this stock, you're a passenger on a ship that the Danes are steering. You're here for the ride, the 3.8% dividend, and the long-term science, not the boardroom drama. So, where does Novo Nordisk stand in 2026? We're looking at a healthcare titan in the middle of a massive transformation. Yes, the 37% drop and the rising debt-to-equity ratio of 63% are flashing yellow lights. But with a dominant $216 billion market cap and a game-changing Wegovy pill now hitting the shelves, Novo is trading its high margins for massive global volume. For the patient investor, that 3.8% yield and the upcoming $1.27 payment in April offer a nice cushion while we wait for the CagriSema pipeline to mature. Wall Street sees a 20% upside from these levels, but the real test will be whether Novo can out-manufacture Eli Lilly and fend off those $50 generics. Is Novo Nordisk a buy the dip opportunity at under $50, or are you betting on the competition instead? Let me know your moves in the comments below. If you found this deep dive into the 2026 healthcare landscape helpful, hit that like button and subscribe for more stock breakdowns. I'm the Bearded Investor and I'll see you in the next one.